can promise after watching this video, you'll have a different outlook on how fair value gaps work, and how you previously were trading them perhaps isn't as accurate as what I'm about to show you. So I'm going to be going over 3 trades I took this week on Tuesday, Wednesday, and Thursday, the 8th, 9th, and 10th of October. Now, there were 2 shorts and a long, and I'm going to break down exactly why I took them, where I entered, and how you can use order flow to accurately predict which fair value gaps are going to hold. So for those who've watched some of my videos, I use something called the Triple X model. And so the Triple X model allows me to catch not the entire move, but it allows me to catch a piece of this move, right? So Tuesday, the 7th of October was a very, very large sell-off, but I'm going to explain to you why it was easy to catch and why it was predictable. Okay, so if we start here just by looking at Tuesday, the 7th of October, right? Just going to draw things back to just before the market opened, right? So this is about 9:30 or 9:25 Eastern. Now, when we come to the markets, we want to look for 3 things, right? I have a Triple X model, which I use every single time. So I want to know where I'm trading from. That's the first thing I'm looking for. So in terms of my key level, I'm looking for a 15-minute fair value gap, right? It's that simple. All you're looking for is a 15-minute fair value gap, right? So for those who've been trading longer than a year, you'll know that this is the fair value gap, right? So that is the FVG I'm looking for. Now, when we look at the markets properly, right, when we understand how to use fair value gaps with accuracy, you're not going to take the actual fair value gap and drag it over like this. You are going to use a candle before the fair value gap, and you are going to use it as a key level. So what makes a key level? The first step is a 15-minute fair value gap, right? Used in this way, right? So if we just kind of drag this over to the right now, this is going to be our key level. Now, the reason I do this is because I want to see the market flip at these areas. I want to see the market act as demand. And then, of course, this was a short trade, act as supply. And I'm going to be breaking down why this was a supply zone, why this is a good key level, and why the market essentially tanked down to here. Right? But in trading, if you can get your key level to be, accurate, 80-90% accurate, the rest of trading isn't so difficult, right? So psychology, I say, is often a scam because you don't actually need good psychology to execute if you know where you are looking for a trade, right? So step 1 is where. So again, what makes a good key level? The first thing is a 15-minute fair value gap. Now, the second thing you notice for those who trade ICT is that we've had a sweep of the previous day high, right? So Monday's high over here was swept on Tuesday. Now, this is a classic previous day high sweep before the market tanks, right? So if anyone's been trading, what you'll find is that the best shorting setups will come. So this is the previous day high. The markets will spool towards buy side liquidity before selling off and targeting sell side liquidity. So this is something we can translate directly into the markets. And the way we do that is by simply using previous day highs and lows. Very easy. So this is the sweep that we had over here. This is now price taking out the Asian range. Sorry, not the Asian range high, the previous day high. Now, the other thing I want traders to understand is how to use the Asian range to your advantage, right? So using the Asian range is one of my favorite things, right? So what I call this is a 2-phase manipulation. So once price creates an Asian range, like here, price will always create an Asian range. This is our accumulation, right? Price accumulates during the Asian session. Now, for us to take sell trades, right? If price takes out the Asian low and then rallies towards the Asian high, this is what I call a 2-phase manipulation model. Now, this is my favorite type of manipulation model, right? The reason why is because we've taken out the Asian range low. So this is phase 1 manipulation, or sell side liquidity. I'm just going to write sell side liquidity, SL. But we've also taken out the Asian high, as well as the previous day high. So we have liquidity acting as a huge confluence here, and I love this. Previous day high sweep, Asian range high sweep, right? Asian range low high sweep, right? So we've taken out liquidity before our entry, which is of course at this key level. So if you're stuck on liquidity, focus on Asian highs and lows and previous day highs and lows. These are the easiest to use, right? So again, just to quickly break this model down, we have sell side liquidity being swept. We have buy side liquidity also being swept. And this is our key level to sell from down to here. So the reason I like this is because we've actually swept sell side and buy side liquidity. So we've manipulated the only 2 sides of the market, which is sell side and buy side. This is something I look for in my trading. It's one of my It's probably my favorite manipulation model, right? So once we've gone through that now, what we can see is we have a sweep of liquidity, both previous day high and I guess Asian high and low. We have a 15-minute fair value gap. Now, the main confluence for taking the short on Tuesday came down to this over here. Now, this is the weekly candle, right? So PO3, if you just go to indicators and type in PO3, the one I use is this one by 2 degrees. So this is the weekly candle, right? Let's just position that now. So this is the weekly candle. So for those who don't understand how to use a weekly candle, it's quite simple. The week will open and we will manipulate to the upside, right? We will take out buy side liquidity. Now, when we're above the weekly opening price and we get confirmation at a key level, again, confirmation is very important. We want to be selling above the weekly opening price. Now, I'm going to explain to you very simply why that is because the market will go higher to go lower. The market will go lower to go higher. And the best way you can interpret this is just by using the weekly opening price. It's my favorite. It's not really an indicator, but it's more of a tool. It's my favorite tool in the whole of the market. Now, what I want traders to pay attention to is look at the size of this wick, right? I've circled it for a reason. Now, if you sold on Tuesday the 7th, look at the size of the wick as the day progresses. There you go, right? So look at that. Now the wick goes from about this big to this big. Now, a mentor of mine, a trader of mine said the best traders can position themselves accurately inside of a wick. And that is so true. You don't want to position yourself in the body, right? You don't want to be selling down here. You missed most of the move, right? So if this is the weekly opening price, logically, you want to be, I'm just going to call this WOP. Logically, you want to be selling anywhere significantly above that. Now, you're never going to catch the exact high, but you don't want to be trading inside the body, or certainly you don't want to be selling below the weekly opening price. If you want to be a trader, right, you need to position yourself inside of a wick, right? And the best way you could do that is by simply positioning yourself inside of a wick, right? It's my favorite line, right? The best traders can position themselves inside of a wick, right? So notice how when we sold, the wick was only this large, but as the market moved down, the wick expanded. So your job is to position yourself and to ride essentially the wick as price descends, right? As price goes down. And we do that with a key level. So if you don't know where to enter from, it becomes very difficult. So that's kind of the first thing I wanted to go through. This was my key level. So to quickly break that down, we had a sweep of liquidity. We had a 15-minute fair value gap. We're above the weekly opening price. And also, having said that, we're also above the daily opening price over here. So we have a lot of confluences, which made this a very, very good key level. And that's most of the work done. So when we now go to the lower time frames like this, right? So I'm just going to make the charts a bit cleaner. When we go to the lower time frames, what we're looking for now is a simple break and retest, right? We're looking for this. We're looking for price to come in, break the level, retest the level, and then we look to sell. It's that simple, right? Every single strategy can be boiled down to a break and retest. Now, why is it that some break and retests work and some don't work, right? Well, you're never going to have 100% accuracy and strike rate. But once you know where you're looking from, the next thing is, what are you looking for? Right, so if we just continue to play price on a little bit, we look for a break and retest. So let's kind of dive into this candle, this zone. So this gray box is the zone, and I am interested in buyers and sellers inside of the zone. I'm not interested in patterns or market structure shifts or lower time frame fair value gaps or any of these things. I am interested in using buyers and sellers to tell me whether to buy and sell. That's it. So now that we've had a break below the level, I simply draw a line like this red line. And I tell myself I'm only allowed to enter short when we come back to this area. So what I'm looking for effectively is price to come into a level, price to break the level, price to hang around here, show me a valid retest before shorting. And I will look to short in this region, right? So here, and I'll take whatever 2, 3, 4 out. I will look to short in this way. Now, what gives me the confirmation to look for a short, right? So this is where I'm going to bring the Discord up, right? So this is my private Discord. So this is what I use just to update the traders and stuff, right? So just a couple of lessons on here, right? Let's just break this down logically. So this chart over here, this is the ATAS platform. Now this key level, this blue box you see here, is the same as this gray box, right? So let's get them side by side so it becomes a lot more of a powerful exercise. Now, when we look at this over here, right, what we can see is a couple of interesting things, and I want traders to understand this and break it down. I want traders to appreciate this. Now, when we come into this level, notice how we see a lot of red candles and we see a lot of negative delta. So a very quick lesson on delta. We have, if we just take a look at this candle, we have a left number and a right number. The left number is the bid and the right number is the ask, right? So what that means is that the left number is the aggressive sellers and the right number is the aggressive buyers. All right, so aggressive sellers on the left, aggressive buyers on the right. The way you want to understand this very simply is that if you look at this price point over here, so this is going to be 67.95. It shows you at 67.95 roughly. Let's say you take 222 for 447. It shows you that there's 227 aggressive sellers. They're going in with market prices, hitting the bid. They're trying to drive price down. Those are the aggressive sellers. The right number is the opposite. They're aggressive buyers. So what you can see here is if you see 222 for 447, you can see roughly a 2x difference between the right number and the left number. Now that's illustrated because it's highlighted in blue. So that shows you a blue delta, a positive delta. This shows you that there's more aggressive buyers than aggressive sellers. The key word there is more aggressive buyers and aggressive sellers. Now we see the opposite as the market breaks below this level, right? So we can see aggressive sellers here, 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 here. So we see a break below the level, which is the first step in a break and retest. So now what we're doing is we want to let price kind of play out, and we want to, obviously we need to be patient, right? One quick thing to note, I think every trader should understand this. We had the break at just after 10 a.m. Eastern, I'd say 10:05 Eastern. The entry didn't come until 10:20, I think it was 10:23:24. I think I entered at 10:23. The short didn't commence until here, right? And obviously my target was a 2R or whatever it was, one point, I think it was 1.8 I caught, 1.8R. So if you just take a look at this setup, look at it carefully and ask yourself, what makes it valid? From all the knowledge you have now, what makes it valid? So there's lots of ways people cope their way out of this. So for example, they might see a lower time frame fair value gap like this. I know some traders rely on SMT, SMC. A lot of it is just lines, right? Lines and patterns. But what gives you the confirmation to actually determine who is in control at this level, right? So it's order flow that tells you who's in control, right? It's very difficult to see otherwise who's in control, right? So what you've had over here is a very, very classic break, and we've had a retest at this level. We had multiple retests at this level, right? So the reason I say that is because we had obviously a 1 minute fair value gap here, but we had, this is our high of the retest. So we're going to be focusing here, but we're also going to be focusing here as well, inside of this fair value gap, right? We're going to be breaking this down. Now, what made this short trade valid, right? Why was this a valid setup? Okay, let's go to the Discord and see. So here was my entry, right? So my entry that day was at 67.89, right? Stops just above 67.94, right? Just above the level over here. So let's break this down again. So now what we're going to do is we're going to focus on the initial bounce. This was the highest bounce. I call this the retest rejection. So price wanted to retest the level or retest the area. And this is where we had an absorption and an exhaustion, right? Big words, but they're easy to explain, right? So I'm going to break this down. Now, if you look here, what we can see is we can see a lot of blue delta, right? Just like previously, if you look at my previous image over here, we had a lot of blue delta just here. So what does blue delta actually mean, right? So if you're trading fair value gaps or trading SMT divergence or even indicators, try and incorporate the order flow into however you are trading to give you a true indication as to who is in control. So if you're using a VWAP or an EMA, for example, next time price comes and bounces that VWAP or that EMA, try and incorporate the order flow alongside that so you actually know who is in control of the price, because EMAs are lagging. They don't tell you what you're doing. Support and resistance themselves, they don't give you too much context unless you put the accurate context to it, which is what we're going to go through now, right? So I'm going to be breaking down a few delta outliers. I call them delta outliers because delta outliers are essentially areas on the chart which are highlighted in dark, in this case dark blue. So 351 for 595, 305 for that says 624, And we also had over here 67 for 412. But if you just focus on these two over here, which corresponds to this region here, aggressive buyers are trying to drive price higher, right? We see aggressive buyers because we can just read the numbers, right? 0 for 243. We see a lot of blue delta, which means that the right number is significantly higher than the left number. The ask is greater than the bid. So what does that mean? So I'm just gonna, this yellow box here, it shows you at 67.95. There is a lot of aggressive buyers, right? They're trying to drive price up. Now, were they successful at this area at 67.95, 94? Were they successful? Well, not really, because we broke below this level. So what does that tell you about this entire level and this entire region from about 67.94 to about 67.90? That 5-point region, what does the order flow tell you about that particular price area? It tells you that price, there's a supply at the area. Buyers themselves have been absorbed. They've been exhausted, right? An exhaustion you can see with a 0. When you see 0 at one high or low of the movement, that 0 is a finished auction, which means that buyers and sellers they're no longer aggressively trading at that price because you see a 0, right? So you can call it a finished auction, right? Finished auction just means buyers and sellers are no longer interested in trading at that price. There is a new price that essentially the market wants to trade at. Your job is to determine which price that's going to be, and more importantly, determine the direction in which that price is going to be, right? So is the direction upwards or downwards? So in this case, what we can see aggressive buyers have failed over here. We created a bearish fair value gap. So what that simply means is that these buyers have failed. So who's in control of the price? Is it buyers or sellers? It's sellers. The reason it's sellers is because we had a lot of aggressive buyers and they failed at this point to break above here. Bearish fair value gap. Lots of evidence that buyers are unsuccessful at driving price up. Now, let's take a look at this 1 minute fair value gap, and let's also bring about the price action that represents it, right? So notice how I'm saying these are candles and fair value gaps, right? So the actual price action is on the right hand side of the screen. So look at the yellow box here. Let me make it clearer. Look at the yellow box here and look at the same region here, right? So specifically what you can see is you can see a lot of zeros, right? 0, 0, 0, 0, 0, 0, 0, right? A lot of finished auctions, which means that the market isn't actually interested in trading at this region. So you know the market's going to move up or down, right? Your job is to determine if it's going to move up or down. And the way you see that is by looking at the delta. So positive delta, no reward. We also see positive delta here. The one that sticks out to me is 75 for 244. 75 for 244, right? Aggressive buyers have failed here. Aggressive buyers have failed over here. Now the question is, if we break below this level, which is what we had over here. So we broke below this level, but also remember this initial break? We broke below the initial break. So if price can reclaim this area, right? What does that tell you about all these aggressive buyers over here? Because remember, there were a ton of aggressive buyers, right? Up here and also here as well. What does that tell you about the aggressive buyers in the circled regions, right? What do you understand by that? Who is in control of the price? Is it the buyers? Is it the sellers? Well, it's the sellers, right? Supply is in control because aggressive buyers have failed. Supply is in control. So what that means is this is actually a supply zone. This level that I spent 5-10 minutes explaining at the start is a supply zone, right? Not because it's above the weekly opening price or the daily opening price. Those things help. But what gives you the confirmation to sell is the fact that sellers are in control. And it's that simple. It's not anything more complicated than that, right? So this trade, well, yes, it did play out. I think I must have exited around here, and price really did melt that day, right? So this proved to be a very large area of supply, right? Price heavily melted that day, right? So this proved to be an area of supply. Now, if you want to catch risk reward trades like this, you need to start understanding what's going on over here. And the only way you can understand that realistically is by understanding what's going on over here. So my entry that day came at 10:25 Eastern and exited around 10:40, whatever it was, right? So this was the trade itself. So $575 for the day. That was a closed profit in the end, roughly a 1.8 R risk reward. And again, executions at 67.89. Right after I saw aggressive buyers had failed, aggressive sellers took control of the market. So that was Tuesday's sell-off. Now, what's interesting now, I want every single trader to keep their eyes on this level, because what we understood here from Tuesday the 7th is that this was an area of supply. All right, so one thing I like to do in trading, and I think it's one of the most powerful things, if you have a successful level, keep that level on your chart and anticipate the next day to also give you a trade at that region. So that's important. So now, if you just take a look at this, so my pre-market plan for Wednesday was relatively straightforward, right? So on Wednesday, this was Wednesday now. So on Wednesday, we had a key level here. You can ignore this key level. I wasn't trading here. This was key level 1 and key level 2. So what I'm saying to traders is, basically, if we can break above 1, I'm going to be targeting 2. Now, when we get to level 2, key level 2, right, which is what we've just been going over, this here is key level 2. Now, when we get to key level 2, I wasn't really trading here. Now, why wasn't I trading here? Well, let me break it down to you. So realistically, this is our structure high, structure low. We had a bit of a high here, we had a low down here. So our dealing range was actually like this. This was our rough dealing range. Now, a quick tip, if you're someone who gets chopped out in these markets, it's often because you're trading near the 50% area, near the equilibrium, right? So you want to be, even though I'm going to break the rules slightly, you want to be buying in premium. Sorry, you want to be selling in premium, buying in discount. What that means is when you're near the equilibrium, you don't touch the markets at all. Another reason I didn't touch the markets is because of the weekly opening price. Look at how close we are to the weekly opening price. When you're at the weekly opening price, you want to see that as a no trade zone, because from there, the market could go up or down, and it's not our job to predict that. We only want to be buying below and selling above, unless you come into a flip zone, which is what I'm going to be breaking down now. So Wednesday's trade was essentially a flip zone, right? A bit more complex, but it's the same concept as Tuesday, just flipped on its head. So now when we go to Wednesday, the 8th of October, we had the same level playing out in reverse. So on Tuesday, we had a supply zone, right? A massive supply zone because the market, sold off heavily. Now, when we come into this same area here, so this is now 10, probably 11 to 11:30 Eastern. When we come into this area now, right, you want to ask yourself, there's only two things that can happen at a level. We can either break below or we can break above. The reason I keep it to two simple things is that if you know you can either buy or sell, the chance of you making mistakes theoretically should go down. The reason it should go down is because you only have two buttons to press, and therefore you only have, I guess, one objective, which is to see who is in control between the buyers and the sellers. It's a lot easier to do that when you define your key level like we've just done. It's also easier to buy and sell when you know who's in control between the buyers and the sellers. And this is important to understand, right? This is basic logic, I think, but a lot of traders kind of get this wrong. So when we come into this level, we know it's an area of supply. We know that, right? So now from here, how do we capitalize on this? So I actually took a initial short position over here. I actually went short down here, right? And I exited my position around, I think it was here, somewhere around here, just before stop loss. I exited my first short position, right? Because it was a valid short. I just happened to take that loss. I'll gladly take that loss as it fitted my plan, right? So my plan is to trade buyers and sellers at key levels, right? So let's break down the long trade, right? So basically what had happened here, if I just make the screen a bit clearer, what had happened here, simply put, was this. My entry for that day was 67.93, and my initial stop, this was a trailed stop, but my initial stop was at just below 67.90, so 67.89. So we're going to be breaking down how this trade was formed, right? So why did I initially go short? Well, the reason I went short is because I saw aggressive buyers here, they broke below this zone, so I went short, right? Perfectly valid. We're also above the daily opening price. We're above the weekly opening price. Price didn't play out this time, which is fine. It's called a loss. It happens. So now we look for the same thing, but in reverse. So how do we do that? So this was the trade itself, right? This was the actual trade itself. I'm going to be breaking down my execution as well using the ATAS platform. So this is the ATAS platform, right? Different setting. I've got a white background for this video. This is the ATAS platform, ATAS, the best platform for order flow trading. You can connect your brokers on there. You can have funded accounts on there. Rhythmic is the data provider, but you can have Apex, TopStep. All your major prop firms are all available on here. So what we can see now, just to clear the screen, is we have one key level. We have our where. We know where we're trading from. Now it's a case of appreciating what to look for, which is buyers and sellers. That's it. That's all you're looking for. So this key level from Tuesday, massive supply. Now we look for this same key level here. So what you'll find here, if we quickly break this down, is this, right? We saw initially aggressive buyers here. Price went down. Aggressive sellers here. Price went up. We peaked above this level. Aggressive sellers, right? So what we see is aggressive sellers here, aggressive sellers here, but we see follow through of higher prices. So it's not rocket science to understand. If you see aggressive buyers and they're unable to really sustain lower prices, if we break above the level here and also here, that shows you that the sellers in this case on Wednesday were unable to sustain lower prices, right? Who is in control of the market then? Who is in control? It's a flip zone, right? Because we've broken above this level, right? So this level was from Tuesday, right? So this was my initial break line. So this was the break. What I'm saying to traders, what I'm saying in the plan is that if we can come here and break this zone, it shows you the supply from Tuesday down here. This supply is essentially, it's failing, right? This supply is failing. So now when you look at this zone like this, if we continue to play price on, we had this now. So this is where the entry gets interesting, I guess, right? So what we had over here, very interesting, is we had a 1 minute FVG kind of like this. We filled the majority of the FVG, right? So again, we're going to be doing the same thing. We're just going to break it down the other way. So this was the FVG on the 1 minute time frame. What was going on over here, right? This is where the ATAS platform will help us, or even the Discord. So what was going on inside of the level? Let's kind of bring them next to each other side by side, right? So 1 minute fair value gap, we had a rejection over here. This rejection is important. I see too many traders trying to find rejections. I see too many traders trying to time the market without understanding what the market is and how it moves. Funny that. So take a look at this, right? 312 for 15. Notice how we had a ton of aggressive sellers here and we broke above the level. So we can see that supply zone from Tuesday failing to follow through on Wednesday, right? We see that with aggressive sellers failing, and also in this level, we see negative delta, higher prices, negative delta, break above the last 5 minute candle, right? This is the 1 minute chart now. So here we saw essentially this number. We saw 312 for 15, 312 for 15, right? Take your calculator out and calculate. That is probably going to be a 10, almost a 20x difference. So what we saw here was a huge amount of aggressive sellers, but they failed to break below this level. Instead, we actually broke above here, right? We broke above this line as well. So this was now a flip zone from supply to demand, right? So my entry on that day, my execution was 67.93 around here. Stop loss below the zone. And also a next question that traders should be asking is, where do you target, right? Where is the target? Good question. Well, the target, not to be greedy, the target is the previous day high, right? Something we keep going back to is liquidity, right? Target previous day highs, right? So if you target previous day highs, you can never be on the wrong side of the market, right? Just no need to be greedy, just target the previous day highs. It's not that hard, right? And obviously we hit that, I think, at some point, just about anyway, we hit that and then we melt off. So the market targeted the previous day high. Simple. Off a flip zone. Again, notice how it's the same break and retest model, right? So take a look at this. Take a look at my entry, right? And ask yourself what was going on here. So this is what a break and retest looks like, a bullish break and retest. And this is what an entry looks like, right? Your entry is going to be like this, right? We have a break, we have a retest back in, then we shoot for the next previous day high or low. Simple, right? So that was Wednesday the 8th. Wednesday the 8th. Now we're going to go to Thursday, the 10th of October. Sorry, the 9th of October, sorry. So what's interesting now is when I started my session, right, I'm going to go through my pre-market plan. My session, my plan is very simple, right? This is structure high, structure low. This was the key level from Tuesday, held as supply, held as demand, and I'm saying to trader, this is my key level from today. So if you trade ES, go and back test the level from this week, right? So this week is the 7th, 8th, and 9th, right? Go back and test this level, 67, 82, 67, 89, right? This is the level you need, right? 82, 89. Go back and back test that level, and you will see an opportunity to short on Tuesday, long on Wednesday, and now short on Thursday. So again, what gave me the confirmation, or at least the confidence, should I say, to take a short? Well, we had this. Look at how the market opened up. So this is beautiful price action, right? So what I say is we want to have some kind of liquidity sweep. It was the Asian high, right? Very accurate, pinpoint accuracy. I don't think NQ did this, but ES did this, right? So we had a sweep of the Asian high, and we come into this level. I already knew this level was going to give us a good trade because it gave us a good trade on Wednesday. It gave us a good trade on Tuesday, right? Why did I feel confident shorting here? The reason I felt confident shorting is because I knew that there were sellers here and I knew there were buyers here. So this was currently an area of demand, right? Because there were buyers resting over here. This was a demand zone, right? I'll just write D for demand, right? This was a demand zone. So when price comes into this area, is it going to be a demand to go up, or is it going to be a supply zone to continue lower? How would you answer this question without me telling you the answer? So without order flow, there's no real answer. It's a trick answer, but we have a demand zone over here. You can use TradingView confluences to give you an indication as to whether you want to be buying or selling. Here's one. Asian high has been swept, right? Here's two. Weekly opening price, right? I love using the weekly opening price because we are above the weekly opening price. If you're above the weekly opening price, you want to be targeting the weekly opening price. It's that simple. And also we've had a phase 1 manipulation, right? So we've taken out the Asian range high. So then the next question is, why did we short from this area and why did I take a loss, right? I took an initial loss over here, right? So we're going to be breaking down the same trade as Tuesday. It just happened on Thursday. So there is my break line here. It's quite a slim level, so I was willing to use this as my break line. So this was essentially my first entry, right? I went short here, had my stop loss just above. I actually had it just below here, really. And I was looking to target the weekly opening price. So the weekly opening price was down here somewhere. This was my initial trade on the 1 minute chart, right? So again, we're shorting above the weekly opening price. And I actually got stopped out here. You can't see it here, but I did get stopped out. So that was my first initial trade, right? So I took a loss about $300 there. All right, so this is my first entry, maybe a little bit short. So again, stop loss above 67.92, targeting 67 entry at 67.87. So that represents this. Now, I want to make something clear that just because you take a loss doesn't mean that the level is invalidated. For me to take this level as invalidated, I would need price to essentially break and then retest here. And then we would see price claiming as demand. I will happily take that loss. But we didn't see that because if I keep breaking down the order flow, if I go to the ATAS platform and break this down for traders so they can see and understand, this level held as demand and now price came to this level and we held pretty damn strong as supply. Right, the reason this held as supply is because yes, we broke below. Notice how we have aggressive sellers that broke below the broke below the level. So it shows you sellers are actually in control. Sellers are actually in control of the price. Right, we see a high volume break, and we had a retest on the 5 minute retest here. This was a retest, so I got stopped out. I just re-entered the trade. Right, so my re-entry was, I think here. So my re-entry was around 18 whatever it was, so about 10:15 Eastern at 67.87 stops just below this zone over here. That was about a 2-hour risk to reward, so very good trade, right? Very good trade this one was, right? So Again, let's look at this. We had aggressive buyers. Look at that number over there. That says 304 for 621. So it's 623. So it's about 300 to 600. Double the amount of aggressive buyers and sellers, right? So what does that tell you about who's in control of the price? Because if we have aggressive buyers here and we're unable to break above this level, such a clean rejection of this level, we broke below with the body. There was my first entry, right? We came in, I sat in a little bit of drawdown, and we broke below my entry again. Look at what was going on over here. 285 for 383. 189 for 203, 81 for 197, 0 for 83, finished auction, right? Finished auction. Zeros all across here shows you that this level is basically disliked between buyers and sellers, right? Buyers and sellers do not want to trade at this price. This is why order flow is powerful, because order flow can tell you where a reversal is more likely to be, and it can also tell you which direction the reversal is going to go. So it's kind of nice, right? Because that's what every trader is trying to do. Break and retest, reversal, bounce, rejection, support, resistance, trend line. It's all kind of the same thing. It all comes down to basically catching a reversal, a break and retest. So break and retest itself is break, retest, enter after the break. So enter here, right? 67.87. Going back test 67.92 to about 87.86. Go and back test that on ES. Go and back test it on the order flow. Go and see how this market actually worked, right? Aggressive buyers over here failed on 1-2 occasions. That is the reason the market moved down, right? Because essentially what you had was large aggressive buyers, but no follow through. They could not break above this level. We broke below the level. We broke below the initial break here. So who is in control at this level? Who is actually dictating price? It's the sellers, right? Passive sellers, right? Passive sellers are propping up here. Passive sellers are propping up here. And that is the reason we had another really good meltdown, right? So again, second entry came probably around 18 past 10, so around here. Stops just above this wick. Again, I am confident to put risk on. I am confident at this. I am confident at this, right? Because we had a lot of aggressive buyers that were unable to break the zone. So it shows you this is a true resistance zone, right? It's a classic resistance zone. It's a true resistance. It's a true supply because buyers have failed, right? We don't see buyers being rewarded in this region, right? So this is the reason the market kind of sold off the way it did, right? So just summarizing today's video, it's quite a long video I wanted to make, but just summarizing the video itself. If there's one thing I want traders to understand, it's the power of key levels. It's the power of keeping levels on your chart, right? So look at this one level that actually was created on Monday, held on Tuesday, Wednesday, and Thursday, right? So all you need is one level and order flow. That's the only thing you need. One level and order flow. So what we can see on Tuesday, we held as supply. On Wednesday, we held as demand. On Thursday, we held as supply. Now, the question is, if we can stay below this is obviously not financial advice, but if we can stay below Tuesday's low and we reclaim this area, if we have a break and retest, we can go long from here and we can target the previous day highs. We also have trend line liquidity resting over here. Now, it's simple to trade if you can simply define your levels pre-market. That is the secret to trading. Define your levels pre-market. Be patient to wait for the market to come to those levels and then use order flow at those levels to validate any trade you want to take, right? So again, on the ATAS platform, we can break that down as well. On the ATAS, again, if we go to the 15, it's the same thing. Level held on Tuesday, supply, demand, and then supply, right? So if you're interested in learning the ATAS platform, just feel free to comment Feel free to comment below anywhere in the comment section. I'll happily answer any questions. I'm doing some live streams in the Discord as well, completely free, and I'm also doing some free one-to-ones. So if anyone's interested in learning order flow with their current system or model, feel free to comment and I'll get back to you as soon as I can.